What's up, guys? Welcome to episode 47 of the Block Exploring podcast. With me here is Tommy, as always, and in this episode, we're going to talk to you about how 3/4 of the Bitcoin supply is now considered illiquid according to Glassnode, and we're going to be talking to you about Charles Hoskinson, Cardano, and his opinion on the value of community and how he sees that VCs, venture capital firms, do not appreciate community in projects like Cardano, but also in general sufficiently. Now, first, a quick state of the market before we get into all this. And before I do that, none of the information we provide you with in this podcast should be considered financial advice. Now, let's get into the state of the market. I would say that we're in a slightly downwards bearish trend, but not incredibly downhill. You see the majority of the top 20 cryptocurrencies are swinging between -5% on the weekly charts, and I would say -2 or -1. Bitcoin is down 3%, ETH is down 0.5%. It's not too bad, but overall I would say that we are experiencing a slightly bearish start of the year. So overall, that's kind of the state of the market. Let's get that out of the way so you know what mood we are in and what mood the market is in. Now let's start off with, I would say, the 3/4 of Bitcoin supply now being illiquid. Tommy, according to Glassnode, the concept of illiquidity is when Bitcoin is moved into a wallet with no history of transactions outward, so spending. And right now, the liquid supply of Bitcoin makes up 24% of the total, which is all stored in wallets that spend, so hot wallets and these kind of things. What do you think this will kind of mean? Because in 2021, at the end, the final months, we see a lot of price corrections, right? We saw Bitcoin price correct, but there's also been an accelerated trend of people hodling Bitcoin again, people storing it into cold wallets, illiquid wallets. So what do you think?
Yeah, I think it's an interesting development, and I think a lot more people are holding Bitcoin with the long-term perspective. A lot more people are understanding that you don't have to wait to buy one whole Bitcoin. You can dollar cost average into Bitcoin, and Bitcoin is clearly, assuming more of that role as a store of value in a narrative sense and in a more practical sense, because we're now seeing like tangibly a significant amount of Bitcoin is illiquid. It's just not moving, right? But what does that do to price? I think it does great things to price. You're saying that we had like some corrections and stuff, but I think which is true, but it just means that the Bitcoin that is liquid is being traded in a quite volatile manner. But as more and more Bitcoin gets stored, we might see, that price appreciation. While it might still be volatile, the upside starts, increasing slowly over time as more people store Bitcoin.
Yeah,
in a long-term sense.
I also think that kind of the situation we are in right now shows the importance of using on-chain analytics.
Yeah.
What are on-chain analytics? Well, it's basically this, right? This is a big example of it. This is right now we see what Glassnode did was they just compared the amount of liquid and illiquid supply percentage of the circulating amount of Bitcoin, and they look at the divergence between that. If you would look at Bitcoin right now just from a market perspective, you would say, oh, it's bearish to neutral. It's not too, it's a bit downhill. People are losing a bit of faith. It's not too bad. But if you look at the on-chain analytics, you see that a lot of larger wallets are accumulating right now and that there's a lot of people holding. And what this kind of indicates is that there most likely will not be a big sell-off or anything like the dips we've seen in a long time.
Right.
So yeah, I think it shows that importance, and I think this is why a lot of people in crypto tell you to look at the project and actually engage with the project, because you come into their block explorers, you can check out some on-chain analytics and figure out what do you think about the way it's moving, what size of wallets there are. I remember
Who's
a few
buying
episodes
what?
ago.
That's,
Yeah, and I remember a few episodes ago I talked about how to do this by using Shiba Inu as an example, right? Looked at the on-chain analytics, showed and said that there were large wallets holding a large amount of the liquidity, and also that there were a lot of larger wallets. And yeah, what do you know? A few weeks ago, there was like a big sell-off. One of the wallets kind of dumped. These kind of price actions you see,
Mhm.
and it's not the worst, but you need to be aware of it. And if you purely look at crypto from a market perspective, from a currency or commodity or asset perspective, I think you forget this layer of information that is also very relevant to it.
Mhm.
So I think with that being said, we can move on to our second topic for today, and that's from we move from the value of on-chain analytics, which are very tangible and quantifiable, to the value of community, which is not as tangible and quantifiable, because you can have a huge community, but if they barely engage with your project, what's their worth? Think about it, right? And
Exactly.
Charles Hoskinson, the founder of Cardano, said that venture capital companies do not understand that Cardano has a community. And I think what he says here in this video that he recorded of himself is basically Cardano right now doesn't have any dApps, no smart contracts, no nothing. So it's hard to quantify the value of Cardano's community. But there's a large community, and there are other ways to quantify this. And he gives an example of that Cardano as a project has the highest amount of committed people working on it. If you look at statistics found on GitHub, and GitHub it's kind of like, how do you explain it? Where a bunch of coders hang out together and kind of commit to open source projects and coding
Yeah,
projects.
people
That's
kind of
kind of
use
how I
it as
feel.
a portfolio as well. And I get
Yeah.
yeah, just a place to display your work and collaborate, I think.
Yeah, exactly. So, yeah, what do you think, Tommy?
Well,
There's a lot of growth in crypto, right?
mhm,
And Cardano has been one of those projects that's experienced a lot of growth as
yeah.
well. What do you think about this point? Do you think
Well, I agree with
that?
him that like for the most part in crypto, aside from your fundamentals and what the project is, like a community is everything, and especially in a space that's so early and where rug pulls and scams are aplenty. Social legitimacy within the crypto space has become, a valuable asset in itself. If you have that cachet, that social legitimacy with the space, if other people know that you exude, principles that align with their own, that's extremely powerful, because that's ultimately what mobilizes capital in the space, what gets people to do, to jump on projects, get interested in projects, start using projects and such. So community is really a big part of the crypto space, and like your engagement with that community is also like a big thing in the space comparative to like Web2 space, where you kind of don't get, there's no like Facebook community, like no one is like, I'm part of this Facebook club, right? So I feel like it's a completely different vibe in terms of how important community is in the crypto space. But Cardano and VCs, I mean, from the VC perspective, like they're gonna value how the community, if the community is operationalized in some sense. And for a blockchain, an operationalized community is the community that uses the blockchain and whatever applications might be upon it and stuff. And I can imagine for a VC, a traditional VC, if they're getting into blockchain and they see Cardano and they may see a huge community that's very excited, you know,
Yeah.
um, but there are no dApps for them to actually use. That would
Hmm.
raise some skepticism.
Yeah.
I would imagine, right? Because it's very easy to say that these, this community is a bunch of bag holders who are
Hmm.
very invested, and they've already priced in like the long term potential, whilst there's no actual evidence of that, right?
Yeah.
So and which is also an issue, right? What if the community is just there pricing in this for it's it's almost the same as overvaluing stock, you know.
Yeah.
And usually you want to undervalue yourself and outperform, but it's
Hmm.
we'll just see how it plays out, because obviously it's not like the Cardano community is like not doing anything. Like you've just said, on GitHub there's like a very high frequency of activity relating to Cardano, but from a VC sense, like it's probably not clear like where this value is, and like he might see the value in, I think he comes off a bit, uh he might rub people the wrong way in the sense that like the way he's articulating it is as if the community itself has value alone, which is like, yes,
Mhm.
the community existing does, but like what does it do, with that with that value? I was giving the example earlier about like OpenSea that doesn't like, the NFT community is not representative of like an OpenSea community, but the
Yeah.
NFT community largely uses OpenSea, and this community created OpenDAO and dropped their own token, created value for themselves, in
Yeah.
relation to this thing that is on chain, but it's community. So that's where I find like value can be captured in a community. That's tangible value you can see, where there's like a community can actually mobilize itself to do stuff. That's a value in my opinion.
Yeah,
Um,
yeah. I definitely agree
but
with
it's
that, and the fact.
it's a flexible thing.
Yeah, but I do think I see what you're saying here is like engagement is a big part of
Yeah,
the value of community, right?
yeah,
Like we were talking before this episode about how you can have a million, a billion followers, but if they never engage with what you're doing,
mhm,
then it's not as much it's not as much community rather than people who are just observing you do stuff,
yeah,
right? And that's kind of the value of community, is this hands-on part.
right,
But I do think that Charles Hoskinson made a pretty good point
mhm,
of kind of highlighting the way a lot of these crypto projects move, and but that's kind of based on this kind of Silicon Valley approach of move fast and break
right,
things, and then deal with those bugs, right?
mhm,
But he says at the same time that caused a lot of losses in DeFi. For instance, there was what 10 billion
mhm,
this past year
yeah,
lost in DeFi, and he explains via that the kind of slow, almost peer-reviewed academic approach
mhm,
that Cardano has. And I think personally, and full disclosure, I hold some Cardano. I like Cardano as a project, and I respect the approach. I think maybe Cardano might be undervalued because this approach of saying that the market is already priced in, I think that a large amount of the market knows that there are no dApps, no smart contracts on ADA, all that stuff. But I do think that this, just the sheer quantity of the user base and their excitement, which can be measured in right now, before there are any smart contracts, dApps, can be found in more these kind of stats. Like Hoskinson says, there's a huge development community, there's a huge holder community, there's a huge community of stakers,
mhm,
right? I think that's kind of the community you can focus on now as a more quantifiable and I think somewhat reasonable approach to valuing Cardano.
mhm,
And I don't think that the market has already priced in the actual action, because the more transactions that will take place on Cardano, the better it will be for the network, right? Because the rewards will be higher, there will be more need for validation,
yeah,
etc. So I think that maybe
that makes sense.
this past like half a year, I've been hearing a lot of Cardano hate because it hasn't been, moonshotting like every other crypto
Yeah,
project. It's been balancing between like €1 and €1.20. That's it. That's not the most exciting thing in the world, right?
mhm,
But I think Cardano might be still a very reasonable, a very very valuable project for the
mhm,
future, and especially with this more safety oriented approach, and this less because it is a huge issue in crypto, right? The recuperability of lost funds is something that barely is addressed, because the contract should just work, or there should just be no bugs. It should just be, uh,
yeah.
safe
But
and
that's also the
so.
responsibility that comes with self-sovereign money
Mhm.
generally. Like if you're gonna be in control of your own monies, like as of now, that comes with a certain level of responsibility, which if
No, of
some
course.
people forego, it's like, well, that's a GG. But of course, like we need to. Yeah, we just need to see. I mean, I think that's an interesting point you make in terms of, how everything might not be priced in, because that's going to be huge, right? If there are
Hmm.
dApps, all these people use it, that's going to be huge. And it's just, I'll be interested to see how they're able to actually compete with dApps who have made it to market and are actively, capturing market share, and whether, when dApps are released on Cardano, we'll see like a big, you know, very exciting start, because obviously there's a lot of rewards to be reaped from being early. A lot of TVL and staking rewards probably that you want to capture in these
Hmm.
AMMs. And then do we then see uh, a continuation of that because there is that strong community, or whether then you start seeing which dApps actually rise to the top, and which dApp
Exactly.
and what chains do they actually stick to.
Yeah.
Yeah.
And I think, indeed, with that being said, maybe to give a last quote from Hoskinson,
Mhm.
he said, "It's very hard to do this kind of engineering and to do it right with an eye and foresight for the future.
Mhm.
Unfortunately, many of the projects in this space will not stand the test of time. It's just the fact that we will see a great extinction occur in the next 5 to 10 years." I think that makes sense, and I
Yeah.
think that kind of links into what you just said, right?
Mhm.
Like, you need this community to stick to the chain, and I do think that developers and creators in the space need to adopt a bit more of a long-term vision rather than a what is happening right now vision. And I don't know, I think with that being said, we can kind of summarize and wrap up this episode, right? Or do you have something, some last words?
No, it's definitely interesting, that extinction point, because that's what it is. Like, we're so early. There's everything in the space now. There's so many projects, and what we need is like literally time for people to figure out what works and what doesn't, and then in 5-10 years we'll see which rose to the top. 2017, a lot of those ICO tokens are gone, but
Yeah,
we're early. The
exactly.
usual line.
So, with that being said, Happy New Year from us here at Block Exploring. That
Sure.
was the first episode in the new year, and we hope you will stick with us for the rest of 2022. So, have a good year, and we will see you next Monday.
Take it easy.
Peace.